Hello guys, welcome to the channel. In today's video I'm going to analyze the recent Fed meeting, how this could influence the S&P 500, cryptocurrencies or gold. First of all, please leave a like and subscribe if you want. And this said, let's get started. Let's talk about the Fed meeting. You know that today concludes the two-day Fed meeting, which is followed by a press conference. These days are usually exceptional, with high market volatility. However, beyond the immediate volatility, I believe this meeting will not provide any meaningful clues about the future trajectory of the S&P 500, cryptocurrencies or gold. Look at these figures. Money supply in the United States is currently at history highs. Global liquidity is also at record levels. US public debt outstanding is at an all-time high, and the US public deficit is soaring uncontrollably. Housing prices in the US, the S&P 500, gold and Bitcoin are close to their all-time highs or beyond that. So the question is, what could probably go wrong? Currently, future markets on the federal funds expect the Federal Reserve to cut interest rates 6 times from now until the end of 2026. This is the reason why I personally believe that the S&P 500, gold and Bitcoin still have room to grow. The US economy is likely expanding solidly, and these rate cuts could stimulate economic growth even further. I would also like you to consider the following. Yesterday, personal consumption data came out significantly above expectations. This indicates a strong economy, in my opinion. But even more interesting data point is credit impulse. Credit impulse essentially measures the new credit granted relative to a previous period, usually normalized by GDP. When this rate increases, it signals of economic expansion. As you can see in this graph, showing the credit impulse behavior, the G3 are just the US, China, and the European Union. The rate of new credit issuance is accelerating and likely to show positive readings. Economically, this means more people are taking a new credit compared to before, and this credit will finance consumption and investments, pointing to a stronger future GDP growth in these major three economies. Given these data points, I strongly believe that the US economy will maintain a solid growth trajectory. In this environment, with interest rates cuts expected, the most probable scenario is a robust US economy over the coming months. Even though I expect that the S&P 500 will rise at least at 10% in 2026 or even more. Now they don't want us to be happy because they don't want us to be independent and free and buy cheap and sell expensive. Look at this tweet. Someone mentioned that there is a probability of 48% of an US recession. I strongly disagree. Based on the arguments I just shared, the probability is much lower, probably tending towards zero. That's all for today.